Aloha and welcome to Java. Thank you all for joining me. This is for Thursday, February 8th, 2024. First, I would really like to thank both Stephanie and Ants for the super chats. That's really wonderful of you. I really appreciate you guys. Let's go right into the markets. We've got the MMRI to start with, slightly increasing in risk, 268.2 at the moment. So what's going on at the moment? We've got the 10-year yield as well as the relative strength of the dollar, both increasing slightly. That is going to put pressure on stocks a little bit later if they continue. So right now we've got stocks in the green, the volatility index rising slightly. Gold is still down a bit under pressure. If this switches, then gold will begin to rise. We've got oil up a bit on the Middle East tensions. And so we're watching these futures are in the red, kind of telling us a different tale. So short note, it is a bad day for travel. In Germany, they're having ground strikes with their labor, so very similar, but both between the rail as well as at the airport for their ground crews. So you might see some delays if you happen to be traveling in that area. So sentiment right now for the markets is it's weak, but they're still bullish. But after charging forward so much, they're getting a little bit weak. So expecting a bit of volatility and then recovery probably in the afternoon. But we've got some things to watch. So we'll see it has a large effect on that. We've got jobless numbers coming in, as well as a 30-year bond auction at 1 o'clock this afternoon. So for our calendar, just a reminder, and I had to put this here to remind myself, we've got the Chinese New Year of the Dragon is coming on Saturday. We've also got, many of you know, Super Bowl Sunday in the United States. And then also the end of basically this celebration that has been going on for 10 days on the 11th, celebrating Imam Khomeini's return. So that happens to coincide with Super Bowl Sunday. I just want to put a short note of caution. There seems to be a few interesting things going on there. So if you do indeed plan on going to Las Vegas for that, for any reason really, but specifically for the Super Bowl, just take care. So as I said with our calendar, watching the jobless claims coming in prior to the market opening, we're also getting the 30-year bond auction. Talk more about that in a moment. Friday morning, we've got some numbers mostly on crude and then also positions. So these are the earnings we're expecting coming in after close today. Affirm, Pinterest, and Expedia are expected to be larger movers. We'll see what happens with that. And Friday earnings, these are all prior to market open, notably AMC. And then we've also got a couple of others. So, wanted to bring this up because this was a large effect yesterday. The 10-year note auction, so $42 billion in 10-year notes. This is the largest auction ever. And they did manage to basically find buyers for all of these notes, with the lender of last resort only purchasing roughly 13%, which is down from before. So it says a lot about basically people cashing in their dollars, purchasing the debt. So with this, just a short on the banks, we've got NYCB, the bank that went down. It's bringing back fears about the banking crisis. But really, when I bring up it again, if you haven't heard or if you knew, the March 11th date for the short-term lending program ends. And we're going to be watching that. I expect they'll either replace that with something or make sure that they speak that day to manage the markets. So on the real economy, we're stuck between two fronts. So we've got either inflation, where people are unhappy because prices are going up and are having issues with affordability, or right now what we're seeing in China is deflation. So prices falling fastest in 15 years. Why is this a problem? Because companies going to cut jobs and people will be out of work, and that's basically recession, going into depression. So really the tale of this is that it's not so much the numbers, but it's the rate that it happens. So, for instance, you could purchase a house back in 1945, $3,000, and that was expensive back then. But nowadays, that's you could purchase that in a month. So it's okay that we've come up to the prices that we're at, but it's the rate either increase or decrease that we'll be watching. So little bit about consumer credit because it came out. Americans missing credit card payments at a stunning rate. Talking about that's how they're dealing with inflation. So New York Fed came out with their report. We're talking about how the US, the amount of debt is crazy. It's absolutely ridiculous. 17.5 trillion household debt, 12.3 in mortgages, 1.6 in auto loans. And this just, the numbers just kind of are mind numbing. You just don't even really grasp the concept of how much money that actually is. So, with all of this going on, we've now got mainstream media directly conflicting. These stories came out within 7 hours of each other, and it's using the same numbers. So I just want to show, because this really actually highlights how the mainstream media can spin stories, what's actually going on. And to me, it shows that we're in a consolidation period. And typically in the markets, if you're not a trader, you have a consolidation period where things kind of bounce around. They go sideways. Price action goes sideways for a while. And it's building momentum for a move. Which direction? We don't know yet, but it's normally a larger move. We'll see if it's up or down. So housing market makes a comeback. We've got this side versus the other side. So same numbers, same housing. So housing making a comeback versus housing demand stalling out as mortgage rates march higher. So the difference in these. The first one, the bullish case, saying that Americans can get jobs if they want to. They're earning more, spending, fueling growth. So we can make arguments as to why that is, but they're talking about the consumer still doing really well, have jobs, they're able to pay their mortgages. So the interesting part at the end of this narrative is that purchase activity is very strong to start 2024. However, activity is still weaker than a year ago because of housing supply. So, counter argument on the same numbers about how housing is stalling out. So, their argument is that demand ground to a halt last week because mortgage rates had increased. So, they're talking about the increase entirely due to current homebuyers who refinanced their mortgages. So, not new purchases, refinancing. And what they're talking about is this is currently they're refinancing their mortgages in order to pay some of their other debt that we were just speaking about, either the short term credit card debt. So, with that, I've got a short story on the banks. I've got a small business owner in Oklahoma. She made a deposit $13,500 into her account, but the money never showed up despite her having the deposit slip. Basically, she's going to have to wait a couple of weeks prior to being able to use her funds. It's her money. However, this is also talking about when banks are allowed to delay funds availability. So basically, this is just to highlight when you put your money in with these institutions, you're giving it to somebody else. They can do with it as they like and change the rules. So be cautious. With everything going on with the banks, I urge you to get your money out other than what you absolutely need to. So we have a couple of notes. I got a lot of dislikes regarding this post, but it's again, the Russian President Putin, and he's talking about the differences that we're seeing between the West. And I agree with this quote that they are destroying the family unit, basically, which is at the very base of our society, the identity and the culture, and then talking about more things going on. We've also got the US is invoking UN law after they're saying that Russia used North Korean missiles. So they're going to be in a hot seat for that. We will, increase war, because war is what they're looking at bringing us out of basically the depression. So we've got more things going on with the real estate crisis because of the whole commercial real estate loans going bad. This in particular is showing the spread to Europe and in particular to Germany again. So they've had a drop in their market because they're all of the manufacturing and production issues. So what do? They decide to try to nationalize a section of the Russian energy plant. So I don't think Russia's going to be very happy about this, but their whole production narrative and their GDPs are built on inexpensive energy. So they're getting desperate. So we've got the Russian pipeline gas supplies to the European Union, even with all of the sanctions, it rose 41%. So Russia's really doing really well on the back of this. We've got another war going on, the currency war, and Russia is now again buying foreign currencies. They're stacking when the ruble is strong, purchasing other assets that are less. Moving on, we've got the US Senate failed to pass more funding for Ukraine. So this was the bill that had another $60 billion going to them, and it was under the guise of helping with the border. So we've got the United States Air Force are seeking retirees to come back to active duty because if the funding doesn't fail, they're going to send more people to war. Why? This boosts the GDP, it keeps the economy growing, and it exports the inflation. So right now, that's the game. The United States is trying to export as much inflation as it possibly can to other countries before letting this fall. Because you can either have an economy or a currency. You can't have both. So they're trying to bolster the economy temporarily, and then I believe the currency will be let go after. So we did just get another warning from Iraq, basically after we had some more issues there. So again, there are threats of retaliation. Just really quickly, we had a presidential candidate. Wanted to bring this up because she lost to a none of these candidates vote. So people chose none of these candidates over the one running. On to some lava updates. We've got the European Union state announcing compensation to farmers as protests flare up. So, in particular, this is Spain. Basically, they saw everything going on in France and they don't want any part of it. So, they decided they're going to basically do a deal with them and cut this as early as they possibly can, which I think is wise because farmers are really key to a lot of things they're beginning to find out. So, a couple of other stories. This first one, this is the link. I will put it in the description, and it's regarding cloud seeding. So, just want to talk about this basically environment weather control. Something they've been doing a long time. This is a great short video on it if you're interested. We've got one other issue. I've been talking about water and why you need to start filtering before something happens. Well, it's too late for this area, and this is in Hawaii. And what happened is their water had a taste, strong gasoline flavor. They have diesel in their water from a nearby spill. So, water is not supposed to have a flavor or color. It had an oily sheen and taste. So, they did testing, has diesel in it. So just start filtering your water now, just in case something like this happens. I was just talking about it yesterday. It's a little ironic. So with that, I wish you all a green trading day, wonderful day in general. And until I see you again, my friends, stay free.